Welcome back to the channel. A lot to unpack this week on our Finance Friday episode, talking about mortgage renewals, what to do 2025. About 100,000 mortgages each month in 2025 are anticipated to renew with many of the major banks and other lenders across the board. That's 1.2 million Canadians that are going to be facing the conversation around what to do next when it comes to mortgage renewal. What does it mean to renew your mortgage? What are the differences between a refinance and a renewal? A lot of questions about what you can and cannot do at renewal time. We'll unpack that and more on this week's episode. So welcome back once again, talking about mortgage renewals. I mean, this is really a big question for many Canadians, especially those that are approaching mortgage renewal at some point in 2025. Now, by now, most Canadians with a mortgage would have got their annual mortgage statement delivered to them either via mail or through your inbox, or maybe logging into your financial institution's portal and seeing exactly how much money's been contributed, how much money's been going towards principal, how much money towards interest, and ultimately what that maturity date is. We advise all our clients, as I said, to make sure that they're ahead of that mortgage renewal date. Diarize that date so that you know not to wait till the last minute. More times than I would like to admit, a lot of clients wait to the last moment, the last possible moment to renew that mortgage. And sometimes it pays off, sometimes it doesn't. And it doesn't give the client enough time to actually shop around, get some different quotes, and actually understand what they need to do with their mortgage. So sometimes clients will approach us at mortgage renewal, say, hey, Anthony, look, I got my mortgage renewal. I got quoted this rate, but I would like to, consolidate. I would like to pay off my line of credit. Got some unpaid credit card bills that I want to take care of. Now, ultimately, there is a difference between refinancing and a mortgage renewal. Let's kick it off with mortgage renewals. Mortgage renewals, very simply, are you're taking your existing parameters within that mortgage and you're just renewing into a new term. So whether that's 1, 2, 3, 4, or 5 years in a fixed or a 5-year variable, that is basically what you're doing. You're taking your existing amortization, that existing mortgage amount, and you're basically just renewing it. Now, you could renew with your existing lender. Most times when you're renewing with your current lender, you just need to sign back the commitment. You need to sign back the renewal agreement. And oftentimes the credit check is done internally through the bank, but you do not required, or you should not be required, to actually provide any source of documentation when it comes to income or current employment. And this may play out in favor for many Canadians that may have a situation that's popped up. And ultimately, this might be the path of least resistance for some Canadians, especially as we look at the current landscape here in Canada. Now, the other thing to understand about mortgage is if you're looking to maybe get a more aggressive rate. Maybe you're with one of the lenders that, maybe one of these broker-friendly banks or one of these other institutions that may not be federally regulated and are heavily determined or heavily influenced by what's happening in the bond market. Something right now that we see happening is that bond yields, treasuries, everything seems to be moving upwards. And that obviously has an impact on fixed rate mortgages, not on variable rate mortgages, as we await the next Bank of Canada rate announcement on January 29th. But with that said, these lenders may not be offering you the most aggressive renewal option. You may want to consider talking to a mortgage professional to get an idea of what's happening in the market, and if you can actually go to a different lender, save a little bit on the interest rate. Now, even though you may be transferring from lender A to lender B, the qualification on that has been, for the most part, basically removed as of November 21st. If you are switching your mortgage, transferring that mortgage from lender A to lender B, you're not asking for new money. You're not changing any of the parameters except for the term of the mortgage. You're just basically transferring the amortization, all that, over to the new lender. You do not need to undergo the stress test. You will basically be qualified at the current contract rate, whatever that rate is that you're being provided. Now, there is a little caveat here. Some of the major financial institutions that are federally regulated, not all of them, do their own checks. Some of them will still stress test the mortgage, right? Some of them have the option. They don't necessarily have to follow the rules. They can actually be a little bit more aggressive and say, you know what? we want to double check all that. We do want to stress test the mortgage just in case. And something that we've basically come across in the last little while as we're dealing with a lot of our clients, some of them that may be with different institutions or different banks that may not be federally regulated, some of the major banks may not accept that transfer from that particular lender into one of the major 5 banks, right? So you have to be very cautious about that. So for example, the biggest controversy that we're seeing right now is, let's say you're with an equity lender, one of these banks, these B alternate banks that are not your conventional tier A lending criteria, they don't fit in. And you maybe now are eligible to move into a top tier bank or broker friendly bank that offers those A rates, the stress test still applies, right? So this is where there's been some conversations. Now, some of those banks that you may, as a client, be in, I know a lot of our clients may be in with some of these broker-friendly banks or some of these alternative banks that offered, higher ratios, higher thresholds, different situations, credits, so on and so forth. Maybe over the last few years, you've improved that situation. They do have potentially some graduation programs that will allow you to move over from their B side to their A side if that lender actually offers that particular type of product. So it's very important to understand that. Obviously, speaking to a mortgage professional can help keep thousands of dollars in your pocket, making sure that you don't leave any money on the table. The banks make enough money. Let's help our clients keep some of that money in their pockets. Now, with this whole renewal conversation, obviously the stress test, obviously understanding how lenders are going to be more aggressive on their renewals. Remember, it's always cheaper to keep an existing client than to acquire a new one. But sometimes lenders, are on the gas, some are on the brake, and depending on what cycle they're in, you want to really consider, shopping around for your mortgage, especially if you have the income and you have the ability to potentially qualify, even if you have to undergo the stress test, to shop that renewal around. Just don't sign back the piece of paper that your bank gave you the first time around. Sometimes even reaching out to lenders to see if they'll be more aggressive on that rate can help keep money in your pocket. But with the renewal process, as we've mentioned, these 100,000 new renewals that are popping up every single month, we've seen our emails we're inundated with a lot of our clients that are approaching mortgage renewal. And sometimes it's best to just stay with the lender that you're at, especially if that rate is aggressive. Even if it's a small amount of difference in the rate, is obviously up to the client. We'll present the information to them, say, hey, you can renew. It's going to save you about $15 a month or, the next 3, 4, 5 years, depending on the term. It's entirely up to you if you want to go through the switch and transfer process, right? I mean, ultimately, it depends how you value that particular set of money. If that $15 or $20 a month is going to make or break you. And ultimately, at the end of the day, with a lot of these lenders, there are switch and transfer programs where they do take care of the majority of that cost, whether that be the discharge from your existing lender, which can range anywhere from $280 to $450, depending on the lender. Obviously the legal costs, whether it be done through an internal system, through the internal banking process, that's usually done through what FCT or FNF. These are basically title insurance companies that switch the mortgage over, so you don't have to necessarily go to a lawyer to do that. And ultimately, these are some of the conversations. But I mean, enough with the renewals. We've talked about, let's say you're in a situation right now where your mortgage is coming up for renewal. This is the perfect time to really think about, do I have any unpaid credit card bills? Do I have any lines of credits? Is there any renovation projects, any reason why I would need to pull out equity from your home in order to maybe, looking for a new home in the future. You don't have the deposit that you will be required to present with the offer if you go shop for a new home. Maybe you have a line of credit with a balance on it. You want to try to amalgamate that, consolidate into one simplified payment, while a refinance is the strategy at that point. I mean, ultimately, when you refinance the mortgage, these same rates may or may not apply. The lenders usually have a renewal rate, which is basically a signed, sealed, delivered, very quick, very simple process versus restructuring the mortgage, maybe increasing the amortization, basically allowing you to simplify your payments, maybe save a little bit of money. Because as we look forward into 2025, as these mortgages renew, it's important to understand that a lot of these clients that got their mortgage, a lot of you who may have a mortgage that renewed in 2025 or is renewing 2025, you renewed or you actually originated that mortgage or you renewed back in 2020. If you took a 5-year product, which is very common back in 2020, well, you might have had a rate that's in the low threes, right? Or sub 3%. Now you might be seeing a rate that starts with a 4 in front of it, and you could be seeing a payment shock of around $500+ depending on the size of the mortgage, depending on the amortization, depending on what you do with that mortgage. And we do have a mortgage calculator, a free download for you in the description box below, so you can play around with what some of the current rates are, understanding what the differences in those particular payments could look like for you. Now, ultimately, one thing to really consider, a lot of conversation about what happened over the last few years, and this is sort of like a additional conversation I want to add into that renewal, because a lot of clients are asking me about fixed and variable products, and although no one should be telling you what to select, what type of product is right for you, you have to understand your appetite for risk. Do you see fixed rate mortgages coming down in the next little while? Or do you see the Bank of Canada cutting continuously into 2025 and weighing out those options of taking a fixed rate mortgage today and maybe getting some of those savings right up front, or taking a chance, seeing what the Bank of Canada does over the next few meetings, as we have 8 meetings in 2025, one obviously on the 29th, and what will the Bank of Canada do to continuously improve the sentiment here in the Canadian economy? Will they have to cut more rates? Will they have to cut more aggressively? Will they slow down the pace of those cuts? Ultimately, this is something that we will need to determine. And when you're selecting a renewal process or going through that renewal process, I really think it's important to give that some thought. I know a lot of clients right now are very skeptical on the variable rate product, but key point, something we were telling our clients back when interest rates were very, very low, is when you're usually at the lowest point, that is something that you may want to consider locking in. When we're at the highest point, ultimately there is still a possibility that interest rates, the Bank of Canada can pause. I highly doubt that the Bank of Canada is going to be increasing those policy rates anytime soon. But ultimately, when you're at the top end of the spectrum, rates usually will start to come down. Nowhere close to where we saw back in 2020, 2021, and early 2022. But ultimately, it's entirely up to you. A lot of Canadians right now are on the fence about mortgage renewal, but ultimately, the best advice as you approach mortgage renewal, make sure your documentation's in order. If you are looking to find out more information about your mortgage, what your options are, you can reach out to our team here at InTouch Mortgage Solutions. We're always happy to help. But more importantly, reach out to a mortgage professional, get some advice, understand what your options are, as opposed to just signing back that piece of paper. Understanding what your option, what you can and cannot do with your mortgage, with your financial institution, what are all those options. So ultimately, if you have any questions or concerns, we want to hear from you in the comments section below. Don't forget to subscribe to the channel, but we'll see you next week.